What's up, my future 1%ers? This is the Trader Champ, Cam Jones. I'm not a professional trader, and everything on this channel is strictly my opinion. I'm not telling you to do what I do. I'm just telling you what I'm doing. This channel is brought to you by the Trader Champ app. Trader Champ is a one-day fantasy stock contest where you could challenge any trader from around the world in a one-day fantasy stock contest. You pick 5 of your best stocks. Whoever has the best percentage at the end of the day, they win. A nice fun game to see who's the best, if you can really trade the way you say you could trade. Also, this channel is brought to you by Montre, an augmented reality app that lets you post media to specific locations, and people can see that media in augmented reality through their phone. And you can also rent digital spaces so you can control what people see. If you don't like something that someone posted, you can delete it. You have full control over that digital space if you rent it. Montre, download that app, Montre. So let's get right into it with the stocks, man. It's been a wild month and a half or so. I haven't made a video. You saw my last one when I had the Vision Pro on. It was a little bit of audio issues, but also I was still getting over a little sickness. And before I made another video, I just wanted to make sure that everything was all good. I wasn't coughing all over the video and stuff like that. But we all good now. Hopefully I can keep this video around 12 minutes or even less. So I want to talk a little bit about the market going down these past few weeks. Have we hit a bottom in the stock market? I'm not going to say yes. I'm not going to say no. But what I am going to say is it is a good time to start adding to your portfolio. I mean, the best time to add to your portfolio was probably about a week and a half ago when stuff was really pretty bad. Stuff is climbing up a little bit right now, but it is a good time to add little by little to your portfolio. One stock I want to talk about first is Apple. We talked about this stock in one of my first videos. I was showing you the 200-day moving average, how it doesn't like to go below the 200-day moving average and it fights above it. If you look at, we're going to take a look at the chart here in a second, but you'll see that it did go below the 200-day moving average. I think it went around about 210 or something around there. I think in the video I was telling you that, Apple is a super duper deal around 200. I can't remember if I said that one or Amazon, but if you could get Apple below the 200-day moving average, you good. And I think right now it's still below the 200-day moving average. So let's take a look at Apple on the stock chart. So right here we have Apple, and my green line is always the 200-day, and the red line the 20-day. Blue line is the 50-day, and you can see right here, this is today as of this recording, Tuesday, March 25th. You can see it's still below, even though it closed at it closed 223.77, up 1.3%. It's still below the 200-day. So I think it's still good. You can see right here, a week or two ago, it tried to fight above it. Market was too much for it. It came down. Around this 210 level. People bought it up. It's still below the 200-day moving average. I think it's a good time to add here. And if it continues to go down towards 210, you could keep on adding little by little. This is not a point in the stock market where you just throw, all the money you have to invest in the market, because I still think there's going to be room for a little big swings down here and there, depending on how the news is going or whatever. It's hard to predict right now, but all you could do is take advantage of sales. And like I was saying in the previous video, don't get cute with the stock picks. Stay with the big dogs, the ones that ain't going nowhere. Apple is not going anywhere. They have no competition. You know, they have competitions in specific product areas, similar like AI. They have competition. Overall, Apple as a company, no competition, none. So this is definitely something that you want to make sure you pick up at a good price. And I think right here is a good, a good starting price, 223. Let's see what else. I want to talk about another one. So some stuff that I added. In the last video I said don't get cute. I picked up a couple stocks and I wasn't cute with it. Tesla was one. You could kind of say I got cute with it because they got hit pretty bad. I got Tesla around I think it was 299, 64, 298, 64, something like that. I had mentioned it. I think before in the last video I said I had bought it, but you can see here it went all the way down 220, 216. And you can see it's right back up here, closed today 289, above the 200-day moving average. So I like that. That's a good sign. I also picked up, well, let me go through the stock chart here. I mean, this is it's not the worst stock chart I've ever seen, but it's not, it's not the prettiest either. You can see it ran up, after the election, and then it just slowly came down. I mean, this was a slow, agonizing fall right here, and it's starting to come back up. I think that it could get, I don't, if we come back here, you see a gap here. That gap got filled by this downward move. I don't see any more gaps. The next thing I could point to is the next moving average would be here around $330. If it got to $330, if it kind of slow rolled its way up, slow rolled its way up to 330. No, if it was a slow move up, I'm probably getting rid of it at 230. If it's a explosive move there, like say it got to $330, today is Tuesday, by Thursday, which is, I mean, it could get to 330 tomorrow. I'm probably going to keep it because there's more explosive moves to come there. And I really don't know where I would get rid of it. I guess I would probably look here, small support at 350 or small resistance at 350, which you see right here a little bit. But then if you come back over here, is a little bit also there. So somewhere closer to 350, if I held it over 330, probably want to get rid of it. Let's take a look at another one that I got into. I did not get cute again. Netflix. I got this at $911 and something. This went down all the way to $854. Man, I was like, yo, what is going on? Netflix. That was I'm gonna say Netflix at $850, below $900. That's a better deal than Apple, I think, because I do see the growth potential. Netflix has better growth potential than Apple. I could see Apple, growing slowly. The stock price kind of moves slowly. This is gonna explode. They have, like I said in, I think it was the first or second video, I could see them doubling the stock price from here, from around $1,000 to $2,000. I think I even said, I can't remember exactly. Don't get on me about this, but I think it can get to somewhere around 5,000. I don't think that it will get there. I think they'll split the stock before it gets to around $5,000. They'll probably, I think my prediction is Netflix will split the stock somewhere around $2,300, $2,500, which will push the stock up even more. But this is a lovely chart. I mean, just look at this, steady move up. Yeah, we had a blip right here, but pop back up. That's probably earnings right here. Pop back up. I mean, and then you saw this dip down. I mean, starting right here at the 50-day moving average was probably a good time to start getting in. And then as you can see, it went all the way down here. And now you see it's making this move. I predict tomorrow it'll probably or this week, it'll probably be up over 1,000 by the time it closes on Friday. So an all right move there for me. I think I'm up 7 or 8% on that one right now. So that's not bad. 7-8% gain in a couple of weeks. Remember, this is a beginner's channel. So we want to talk about, kind of smaller gains here and there. Not really, we ain't talking about getting, 300% gains in 2 days and stuff like that. As a beginner, you want to take the smaller gains as long as you can beat out. First, you want to beat savings accounts. Savings accounts right now on the high end paying about 4%. If you can beat 4% a year, I think as a beginner, you're doing pretty good. Second thing, you want to try to beat the S&P 500. It's very hard to beat the S&P 500. I think only about 10% of professional traders, not 10% of traders, 10% of professional traders can actually beat the S&P 500. I do want to say in my son's portfolio that I started for him last year, he beat the S&P 500. So good job, Camden. Let's take a look at this last one, which is Affirm. So Affirm is one that I used to really be high on Affirm. When they first IPO'd, I really liked Affirm because I thought that, it really wasn't too many companies out there like it. You had Klarna, Afterpay, and Affirm. And then kind of like maybe a year after Affirm IPO, you had like so many people doing buy now, pay later. It was easy for PayPal to implement, Visa. I think Apple even had one. I don't know if it's still going on, but it's very easy to implement. At first, when I traded this, I had bought it somewhere around 80, ended up selling it. It was like in about a week or two, I sold it at like $150. I think it had went all the way up to like 180. I'm not going to go back on the chart to see it. It kept going up, but as you can see where it's at now. And then I think last week some news came out that Klarna is going to IPO, and also Walmart removed Affirm as a buy now, pay later partner on the website, and they're using Klarna, which, kind of caused a little bit of this to go down. But what I like this as a short, and, as everything that I just said, I like this as a short position because of everything I just said. Competition, easy to duplicate. Also, another thing that I like is today was an up day in the market and the stock is down. If you short on a stock or you want to go short on a stock, really to me, that's what I want to see. You had a good day in the market, but a bad day individually on the stock. That's bad. Nothing makes me more mad than a stock in my portfolio that's down when we had an up day in the market. I do not like that. So I do think that Afterpay, Square, I think the ticker's XYZ now, they actually own Afterpay. But I think that Affirm is a good short right here. Probably down from here down to about 40. Me, when I short, I really don't like to keep my short for a long time. It's just, it's no real reason. It's just me. It's just something internally that doesn't really want to keep a short position for a long time. But if a stock is bad, you're going to see some aggressive moves down. Nobody's going to short up here at the absolute top. But just look at some of these moves down. If you would have just held this for one day, you went from right here, 80 down to 76. That's probably a good 3-4% move in one day. Let's check out this day right here. You went from 75 all the way down to 68. That's a big old fat candle right there. Big old fat full candle. So these things can, when a stock is getting beat up, they could go down real fast, as you can see just in the market in general. The market could go down really fast. And I think I said this, I keep saying this in the video. I said this in a previous video. The stock market takes the elevator down and the stairs up. It goes down really fast, comes up really slow. That's why I don't like to be in my short positions for a long time, because I could get in a short position and make, a lot of money real fast and not really have to take the risk of kind of staying in it too long. I mean, let's just say I did do a short. Let's just say I did a short around $75 toward the end of this candle right here. Say I kept it for, about 4 days. I'm down here at 61. That's I don't know what percentage move that is. That's probably somewhere around 12-15% in less than a week. That's pretty good money. So I want to get the NASDAQ. There we go. So we on the NASDAQ right here. NASDAQ is still below the 200-day moving average, creeping up a little bit. I would imagine that as it gets closer to this 200-day moving average, it's going to struggle. And it's probably going to make an explosive move lower. I don't think that it's going to start to move up above the 200-day moving average aggressively. As you can see, this 20-day moving average is crossing the 200-day. I imagine that really, I know I said I could see this getting a 200-day and kind of struggling. I could kind of see the 20-day meeting this stock, and that's when you'll kind of see a struggle. And if it does clear that 20-day moving average, because tomorrow the 20-day moves faster than a 200-day. There may be a gap, tomorrow or the next day between the 200-day and 20-day. Maybe it could clear the 200-day gap, and then probably gets blocked by the 200-day. But I don't know. That's just my prediction. We'll see. If I'm wrong, I'm still happy because I own stocks. So cool. If I'm wrong, cool. The market's going up. I'm making money again. If not, it's more of a buying opportunity. So that's how I would look at the market right now. And hopefully kept this thing short. And I will see you guys on the next recording. All right. Peace.